Betty, we are with Randy Kroszner. He's now at the University of Chicago, spent a number of years at the Federal Reserve. We've been looking through the numbers, and I guess, Randy, it's kind of an okay report, the kind of thing you expect to see coming out of recession. But we're not at blow-away territory yet.
No, I think people got much too excited about some of those ADP numbers. And we're slowly recovering, but we're not recovering in any strong way. To in a systematic way, bring the unemployment rate down, we've got to generate 125, 150,000 jobs a month. You know, the unemployment rate's going to bounce around a little bit because it's a smaller survey than the payroll numbers. But we're not getting that consistent job growth. It's going to be a long march to get back to low unemployment levels that we saw in the last 4 or 5 years ago.
When we were just looking at the breakdown of retail, most of it was auto dealers. They sold a lot of cars during the month. But we had a very strong holiday season. It suggests that companies are finding they can do more business without workers, and that doesn't necessarily augur well.
Productivity continues to be high. That's one of the astonishing things about the downturn as well as the recovery. As you said, the firms are being able to make as much or more without as many workers. That's a positive and a negative. It's a challenge to build more employment, but so that's the negative. But it's a positive because it says that firms should still be investing and are still get productivity out of their investment, and that gives us the platform for growing in the future.
But when you have high productivity, you're also supposed to see some of those gains go to workers. But average hourly earnings were up only a tenth after being flat last month. Who's got all the money, and why isn't it flowing through?
Sure, it takes time. I mean, these things are not immediate, and you've got to set the base to make sure that businesses feel confident that they will get good productivity out of the workers, they will get good return from their investment, and we can have growth over time. So I think this is perfectly consistent with reasonable growth over the next year, but by no means blockbuster growth.
So we shouldn't take the unemployment report really at face value. The unemployment number that dropped to 9.4%, that's likely to reverse?
Yeah, well, it bounces around a lot. I think the payroll numbers are much more useful information because it's a much broader survey. And so typically I would look at those payroll numbers rather than just the unemployment rate.
I think Betty has a question. Betty?
Yeah, Randy, I mean, and to your point, Mike, when you were talking about the hourly earnings just up by about 0.1%, I mean, it's basically stayed that way or been below that for the last several months. And so you get the sense, Randy, right, that all that talk about that we are on the cusp of this acceleration in the jobs market is just not true.
Well, I think you also have to take into account that inflation has been very low also, so you have to look at the real earnings, and I think that's one of the reasons why we're not seeing much change, because we've had so little inflation pressure. But I don't see this sort of dramatic change in the job market. I think this is one of the reasons why the Fed is doing the right policy, in my view, trying to buy some insurance against the potential downside risk, which seems a little bit lower than it was before of deflation. But the economy is not going gangbusters, and it needs support in order to come back.
Does that mean, Randy, then that Bernanke talks down this report then?
No, I think it's very much consistent with the Fed's view. If you look at the forecast they've put out, unemployment rate is going to stay persistently high. We'll get reasonable economic growth, which gets back to the productivity point, but not a lot of jobs growth yet. And so I think this is very much consistent with where the Fed was predicting things would be.
And no change in QE2 then. He goes before the Senate Budget Committee today and says, we're on track.
I think it was the right policy when they put it forward. I think it's the right policy now, and I think the data have been very much supportive of what the Fed's been doing.
And so does that leave open the possibility of a QE3, that we have weak numbers like this?
It depends on where we are in 4 or 5 months from now. I mean, if the unemployment rate has not ticked down at all, if we haven't started to see a little bit more job creation, then, of course, the Fed will have to see if it needs to do more support.
All right. Former Fed Governor Randy Kroszner, now at the University of Chicago.